Welcome to the Deep Dive, your shortcut to being truly well-informed. Today, we're diving into Assurant's Q2 2025 earnings call.
Yeah, and it was quite the call. Assurant delivered a quarter that, well, clearly impressed the market. We saw a pretty significant rally in the stock.
Definitely. So let's get into it. We'll unpack the numbers and maybe some of the strategic moves that fueled this strong performance for you.
Sounds good.
All right, so let's unpack this. Assurant delivered a very strong second quarter, GAAP EPS, that hit $4.56, which is up from $3.58 last year.
Solid jump.
Right. But here's where it gets really interesting, I think. Adjusted EPS came in at $5.10. Now, that substantially beat the consensus estimates, which were around $4.45.
Yeah, by about, what, 65 cents? That's a significant beat.
It really is. And if you exclude catastrophe impacts, that adjusted EPS soared even higher, $5.56.
Which beats by an even larger margin, like $1.11. It's quite something.
It really shows the underlying strength.
And what's fascinating here, it's not just the EPS beat, right? It's the revenue, too. Total revenue reached $3,158.4 million. That surpassed the $3,120 million consensus. So roughly $38 million above expectations. That's an impressive 8% year-over-year increase.
8%, yeah. Solid top-line growth.
Definitely. And adjusted EBITDA also saw a robust 19% year-over-year increase to $386 million.
19%.
Yeah. And 13% increase to $415.8 million if you exclude the catastrophes.
So strong profitability growth as well.
Absolutely. This marks a truly reinforcing first half for 2025 for the company. I mean, adjusted EBITDA is up 14%, adjusted EPS up 16% through the first 6 months, both excluding cats, of course.
So a really solid foundation for the year.
Exactly.
Okay, so what does this all mean for the individual business segments? Let's start with global housing. That really seemed to shine this quarter.
Well, it certainly did. Global housing's adjusted EBITDA surged 33% year over year. That's to $214.4 million.
33%. Wow.
Yeah, or 18% if you strip out the catastrophes. Still very strong.
Okay, so what drove that exceptional growth?
Well, there's a few things. Favorable non-catastrophe loss experience, for one. Lower claim frequencies help, too. And significantly, an increase in lender-placed policies.
Ah, right. That lender-placed aspect is interesting.
It really is. It's directly tied to this hardening voluntary insurance market we're seeing across the U.S., where it's just becoming tougher for consumers to find traditional coverage.
So Assurant steps in.
Exactly.
Yeah.
They benefit from that dynamic. Plus, they also benefited from just increased scale from new business wins. They mentioned an upcoming rollout with a new mortgage servicing partner that's set to add around 300,000 loans.
Okay, so organic growth, too.
And their Coverage 360 Plus platform for renters, that's been consistently delivering double-digit premium growth and better penetration rates. Renters' policies were up 11% year-to-date.
So housing is firing on multiple cylinders, it sounds like.
Pretty much, yeah.
Okay, now let's talk about global lifestyle. Did it keep pace? Or was housing doing most of the heavy lifting?
Global lifestyle also showed solid momentum. Its adjusted EBITDA increased a solid 6% to $201.4 million.
Okay, 6%.
Or 7% on a constant currency basis, which kind of gives you a cleaner picture of the underlying performance.
Right. And within lifestyle, connected living.
Connected living earnings specifically increased 9%. 11% on a constant currency basis. That was largely driven by their global mobile device protection programs.
Makes sense. That's a core area for them.
Definitely. And also some modest growth in mobile trade-in programs. They saw strong subscriber growth from new mobile clients, too, adding about 2.4 million new devices protected year over year.
Wow, 2.4 million new devices. What's the total now?
That brings their total up to 65 million subscribers globally.
65 million. That's a huge base.
It is. And they're expanding internationally, too. Acquisitions like U Solutions in Japan and Gestado in Brazil, they expanded their walk-in repair capabilities and automotive distribution networks.
So geographic expansion as well.
Yeah. And the global automotive segment also saw modest earnings growth, supported by improved loss ratios and vehicle service contracts, stability overall. They're benefiting from prior rate increases and some new business wins there, too.
Okay, so lifestyle is contributing steadily. Maybe not the explosive growth of housing this quarter, but solid momentum.
Exactly. Solid and steady, broadening its reach.
So with such strong performance pretty much across the board, it's no surprise. Management sounded confident on the call. What were their key takeaways, and how did they update the financial outlook for you?
Well, CEO Keith Demings really emphasized that the results were, and I quote, fueled by growth across both global housing and global lifestyle. He said it reinforced a strong first half of 2025 and positions them for their ninth consecutive year of profitable growth in 2025.
Ninth consecutive year. That's quite a track record they're aiming for.
It is. And given this robust performance, Assurant meaningfully raised its full-year 2025 growth expectations. They now anticipate full-year adjusted EPS growth, excluding catastrophes, to approach 10%.
Approach 10%. That's a strong raise from previous guidance, right?
It is, yeah. Driven by mid to high single-digit growth in adjusted EBITDA, also ex-catastrophes. And here's an interesting detail for you. When you exclude prior year reserve development, so you're looking at the underlying trend.
Right, stripping out some noise.
Exactly. Those underlying growth trends are expected to deliver double-digit adjusted earnings and EPS growth.
Okay, so the core business momentum looks even stronger.
That's the implication, yes.
That's a strong message. And what about their capital allocation plans? With this kind of performance and outlook, how are they planning to use that capital? Share buybacks, dividends?
Good question. In terms of capital, the holding company liquidity stood at a healthy $518 million at quarter end.
Pretty solid buffer.
Yeah. And the business has upstreamed over $230 million in cash flow. So they returned $105 million to shareholders in the quarter. That included $62 million in share repurchases. And for the full year, Assurant now expects to complete between $250 million and $300 million in share repurchases. They specifically said they're moving towards the upper end of their previously guided range.
So leaning into the buybacks, that shows confidence, doesn't it?
It certainly reflects confidence in their capital position and, that increased earnings outlook. It's a clear signal to you, the shareholder.
We also heard quite a bit about technology and AI on the call. How are these playing into Assurant's strategy? Is it just talk, or are there tangible applications?
Yeah, that was a definite theme. Innovation, heavily supported by tech and AI, seems to be, a core part of their DNA, as they put it. They're making sustained investments in AI-enabled platforms.
To do what, exactly?
To enhance capabilities, drive efficiencies, improve the customer experience. For example, in global lifestyle, their device care centers are apparently using robotics and AI more to assess mobile device quality and process trade-ins faster and more consistently.
Interesting. So operational efficiency gains.
Right. And they're also embedding AI into personal tech support services. Then in global housing, they mentioned deploying generative AI solutions recently.
Gen AI? For what?
To enhance the speed and accuracy of document classification and processing within their loan cracking solutions. They said the early results are impressive.
Okay, so practical applications across both segments.
Yeah, management really sees AI as a powerful opportunity. Accelerating capabilities, improving productivity, enhancing decision-making. It's not just a buzzword for them, it seems.
And tying into that tech focus, they also mentioned something called a circular devices thesis. Can you elaborate on that for us? What does that actually mean?
Sure. This circular devices thesis, it basically refers to Assurant's strategy of expanding its presence within the whole mobile device ecosystem.
Okay.
Covering the full life cycle, from protection and repair all the way through to trade-in and refurbishment. They want to be involved at every stage.
Trying to capture more value along the chain.
Exactly. And a key highlight here is their new strategic partnership with Plug. You might know them. They're a direct-to-consumer platform for certified pre-owned phones and tablets.
Ah, okay. Announced back in July, I think.
That's one. This partnership aims to widen access for device refurbishment and protection attachments. It's all about reinforcing what they call their device ecosystem moat in connected living.
A moat, so defensibility.
Right. And ultimately accelerating growth and value creation. It's about making their services stickier, keeping you within their ecosystem for the whole life of your device.
So bringing it all together, this strong quarter, the raised outlook, these strategic moves in AI and the device ecosystem, what does this all mean for investors or just for you trying to understand the company?
Well, I think this quarter's results really advance Assurant's multi-year pivot. They're moving towards what they see as higher quality, less volatile earnings.
Less like a traditional, sometimes unpredictable insurer.
Exactly. The narrative is increasingly shifting the company from what many people perceived as just a specialty insurer to something more like a diversified protection solutions platform with improving cash flow durability.
A platform company, almost.
Kind of. It's a potentially significant redefinition of their identity in the market.
That's a crucial point. So if you're watching Assurant, what are the primary catalysts you should be monitoring moving forward to see if this story holds up?
Okay, a few key things to watch. First, the pace of those share repurchases. Are they really hitting that upper end of the $250, $300 million range?
Shows conviction if they do.
Right. Second, catastrophe activity. Q3 and Q4, especially with hurricane season. That remains a critical watch item.
Yeah.
Q2 benefited from pretty benign cat activity, remember?
Can't count on that every quarter. And housing loss trends generally.
Exactly. Housing loss trends overall. Third, continued growth in connected living. How are those trade-in programs doing? Are there any more device ecosystem partnerships like the one with Plug? That'll be important for global lifestyle. And finally, the next guidance checkpoint. The Q3 earnings call will give us more clarity on the company's trajectory and whether these strategic initiatives are really delivering sustained results.
All right, makes sense. So that brings us to our This Is Not Financial Advice segment. Time to pitch an outrageous but plausible trade idea for the experienced investor. Just a thought experiment for you. Given Assurant's stellar Q2 and this evolving strategic narrative, what's a compelling, maybe speculative play on AIZ?
Okay, here's a thought, purely speculative, of course. Given the strong Q2, the raised outlook, management's focus on AI-enabled platforms, that device ecosystem moat. How about this? The AI-enabled moat expansion, long strangle on AIZ.
A long strangle. Okay, break that down. What's the setup?
Well, the setup is straightforward. Assurant just delivered a clean beat and raise. Both housing and lifestyle look strong. AI and device lifecycle management are highlighted as key strategic pillars, and the stock jumped, what, over 11%? Shows market conviction.
Right. So what's the wild angle here?
The wild angle is this. While the market liked the immediate numbers, maybe, just maybe, the deeper strategic shift towards being a tech-leveraged, circular economy player is still, kind of underappreciated.
So the market hasn't fully bought into the transformation story yet?
Potentially. If the market does start to seriously re-rate AIZ, moving it from thinking of it as just a specialty insurer to more of a tech-enabled protection platform,
Yeah.
well, there could be significant upside potential.
Okay, that's the bull case. But a strangle plays both ways.
Exactly. Because that kind of narrative shift isn't always smooth, right?
Yeah.
It's not linear. Unforeseen headwinds could pop up. Like, think about a really severe Q3 or Q4 catastrophe event during hurricane season. Or maybe that AI-enabled story just doesn't materialize as quickly as people hope. That could lead to a de-rating significant downside.
So the trade itself, a long strangle means?
Implementing a long strangle on AIZ. You'd target options maybe 6 to 9 months out. You'd buy an out-of-the-money call option, say a strike price 15, 20% above where the stock is now. So if AIZ is at $210, maybe target a $240 or $250 call. That captures big upside if the re-rating happens.
Okay, that's the upside bet.
And at the same time, you buy an out-of-the-money put option. Strike price maybe 10, 15% below the current level. So like a $180 or $190 put. This acts as a hedge or even a speculative bet on those tail risks like bad catastrophes or the transformation narrative faltering.
So you profit if the stock makes a big move, either up or down.
Precisely. This trade tries to exploit potential volatility. If that AI tech narrative really takes hold, implied volatility might increase as the street debates this new valuation, which helps the long strangle. It capitalizes on the potential for a large move in either direction.
Interesting. Betting on the uncertainty around the transformation.
Yeah. The company looks strong, they're investing smartly. But the market figuring out its new identity, that journey isn't always a straight line.
Got it. And the crucial disclaimer.
Absolutely. Disclaimer, this is not financial advice. Options trading involves substantial risk and is not suitable for all investors. You should always consult with a qualified financial professional before making any investment decisions.
What a fascinating deep dive into Assurant's Q2 earnings and where they might be headed. From that really robust financial performance in both housing and lifestyle to these bold investments in AI and that whole circular devices thesis. It definitely seems like Assurant is navigating a complex market with quite a bit of confidence.
Yeah, they really seem to be pushing this move towards being a diversified protection solutions platform. Combine that with the disciplined capital allocation, the tech innovation, it certainly sets the stage for some interesting developments ahead. Keep an eye on those share buybacks and definitely the 2-3 guidance.
So as Assurant continues this pivot, maybe moving away from just being seen as a specialty insurer towards this tech-enabled protection solutions platform, the big question for you to think about is, will the market eventually re-rate this company's valuation? Could it move from an insurance multiple to something more like a tech or platform multiple? And what could that imply for its long-term growth? something to mull over.
Definitely food for thought.
That wraps up this deep dive into your sources on Assurant. We hope this exploration provides you with some valuable insights for your own analysis. Until next time, stay well informed and keep asking those important questions.